Hello and good morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg. And as we continue to bring the updates for the less active financial markets, we dive right into it. Well, the equity markets nosedived yesterday after the FRC results released, and the flight of deposits have put the banking concerns back on the table. Debt ceiling negotiations were already there, and now the market participants are on the caution side, as shown by the consumer confidence released yesterday. It fell to a 9 month low, and it seems that the recession fears are sticking through. On the domestic side, although the domestic performance continues to be robust, it's the factors like the rising oil prices, possible weather conditions, and the global banking concerns which can put a dent into this growth. So, Pankaj, what do you think of this? What are your thoughts on the market currently?
Good morning, everyone. This is a recession fear which is prevailing all across US now. Just to give an indication, the US confidence index at a 9 month low of 101.20. Now, there is a significant divergence in confidence. The current index is at 151, and the future expectations at index at a 68. So this shows that what kind of a pessimism US consumer would be in the coming days. Now, the recession fear led to all major US indices lower more than 1%, and Nasdaq, which is a technology stock index, was down more than 2%. And it's all happened because data was soft and there was a lower dividend expectations. Now, just coming back to the First Republic Bank, this was the bank when SVB failed. The second order impacted First Republic Bank. The stock moved down closer to 90% from 220 to around $20 yesterday. Now, this stock was down further 50% from 20 to 10 yesterday because market saw that there was a flight of deposit of USD 100 billion from First Republic Bank. And if I remember correctly, all large banks have placed deposit with FRB on some kind of instructions from FMC to contain the second order impact of a deposit flight. Now, all this also led to Treasury yields drop. US 10-year yield dropped by 12 basis to 339, while 2-year US yield dropped by further 18 basis to 390. Now, which has increased inversion to more than 50 basis. Now, post FRB, post SVB, this inversion was reducing and moved to closer to 40 basis, 35 basis, now back to 50 basis. The shorter term yields have dropped more than the longer term yields. The other development due to debt ceiling, there's a continued stalemate on a debt ceiling in US, and which has basically had spiked up cost of hedging US debt. US 1-year CDS had moved to 140 basis point. In last 20 years, we have not seen this kind of a spread on US debt. Whether US debt can be defaulted, I don't think so. US issue all its debt in dollar and they can print any number of dollars. But people are getting worried on US debt also. All this development has also got USD got bit yesterday. USD index DXY, which we track very closely, jumped by 0.65% from a low of 101.19 to 101.80 now. Uh, this all creating a confusion. What will happen in the coming days? And this led to a kind of a fall in S&P 500 also. Fed watchers, we all keep looking at the what is the probability of US rate hikes in the next week, which has moved to now 82% from a 90% last week. So the market is pricing there's a 82% probability of a rate hike in next week, whereas market has increased a probability of rate cut by 25 basis point in this calendar year for more than 50%. Now coming back to moving back to commodities, the Brent crude and WTI traded lower 2% around post this economic data set in US, and but still in the range of 75-85. Both the crude oil prices, whether it's a Brent or whether WTI, are basically within contained with 75 to 80 basis point. Spot gold is trading around 2000 USD and getting bid around 1980 on the recession fear, and now 1980 acting as a very strong support. Uh, Indian equities yesterday closed 0.25% higher to 17,780. 10-year GSEC yield moved lower to 711 after seeing a low of 707. We found Nets Bank were active at 81.85 area and closed dollar USD INR closed at 81.96. Today we are expecting a range of 81.90 to 82.10. I expect premiums to move higher. There's another development which I want to highlight, and this is a kind of a reform which anybody can think of. The Gujarat government has yesterday put up a circular for all their holding companies where basically they are holding a stocks. It's a Gujarat state government companies that they have to declare dividends, they have to announce buyback, they have to announce bonus shares if they meet certain criteria. And this is an important development that the prime shareholders, expecting their value of their money which had been invested in the stocks. And if this kind of a development happens in all kind of state government companies, this can lead to a better resource utilization of state government companies. That's all from me, Pankaj. I'm signing it off.
Okay, Pankaj, that was really good, and we didn't see much of the confidence coming back in when it comes to the US consumers, as Pankaj mentioned. Rather, there's a lot of pessimism out there. So, folks, the flight of USD 100 billion deposit was one thing. The stalemate negotiation of debt ceiling is the another thing, which is constantly putting pressure on the market participants. And although there is a good probability of a rate hike in the next week's FOMC, there is still a lot many discussions around the possible rate cut by the end of this particular year. Uh, it's something which only time shall tell, but the yields continue to drop, and the yield curve inversion, one of the indicators of recession, which was correcting for the past few weeks, have started to rise again. And it's currently at 50 basis points. So it needs to be seen whether the banking concerns are in isolation, or it's still continuing on the higher pace. Talking about the domestic markets, yes, Indian equities continue to stay in a ranged action, but the development by the Gujarat state government was quite interesting to watch out for, as they made it an announcement that the Gujarat state government based companies should be declaring dividends bonus for certain criteria. Let's see how things go about, folks. That's it for today, and we shall come back again tomorrow with another round of updates. Thank you so much for listening, and keep managing your risk.